So hi friends, we would be discussing what are the tax saving options available. We would be doing the most detailed review to see where we can save most amount of the taxes and understand all the sections. So let's see. So in tax regimen, there are two tax saving options available. One is the new tax, the other is the old tax. In new tax, the tax slab starts from 7 lakhs. And the old tax, the tax slab starts from 5 lakhs. So most of the tax that we can save is in the old tax. So we would be trying to understand the sections in the old tax and try to maximize the tax savings. So let's see. So friends, this is the most famous ATC where we can save up to 45,000 and the maximum deductions allowed is 1,50,000. So we can save in Provident Fund, Employee Provident Fund, Public Provident Fund, Equity Linked Saving Schemes, that is mutual fund, and National Saving Certificate, Senior Citizen Saving Schemes, Sukanya Samriddhi Saving Schemes, 5 years fixed deposit, life insurance premium, and home loan, principal repayment, and tuition fees for child education. So friends, I want to highlight that not only tax saving is important, the returns that are generated is very important because our income is limited, but expenses like child education, child marriage, retirement, loan prepayment, etc. are unlimited. So it's our responsibility to save taxes and also to get the most returns that we can get from the savings or tax saving options. So to simplify, we would be discussing two scenarios where we would be investing 1,50,000 lump sum at a time for 20 years, and also we would be understanding if we invest 1,50,000 yearly for 20 years, how much returns we can get. So this is a simple calculation that I want to show. The amount invested is 1,50,000 for 20 years. The total investment is 1,50,000. So if you see, bank fixed deposit has given 4.81 and the maximum returns that has been generated in this category is mutual funds. So we can see National Savings Certificate also and Public Provident Fund also, Sukanya Samriddhi scheme also, and Senior Citizen scheme, LIC ULIPs, and the maximum returns that we can expect is from the mutual funds, and the record that I have taken is from the 20 years ELS schemes from the 10 mutual funds companies average. So it's a very interesting scenario because actually if you see, all our finances are related with the investment that we do. So it's very important to understand it. And suppose we are investing yearly 1,50,000, the total investment would be around 30 lakhs. So the bank fixed deposit would offer about 58.49 lakhs. The investment amount is 30 lakhs, but the mutual funds, it will give 211 lakhs, that is 211 lakhs 0.58, that is about almost 2.11 crores. So it's very simple that we should be investing more in things or instruments which can offer maximum returns. So the next tax saving option is NPS, and the maximum deductions allowed is 50,000 and the potential tax saving that we can do is up to 17,000 rupees. So this comes under 80CCD. So the next tax saving option is health insurance, and in health insurance we can save for self, spouse, children and parents, and the maximum deduction allowed is 25,000 and 50,000 for senior citizens, and potential savings is 7,500 and 15,000 for senior citizens. And to summarize, the maximum deductions for family that we can get is 25,000, and parents, non-senior citizens 25,000, self and senior citizen parents, both senior citizens, we can get up to 50,000 each for each category, totaling about 1 lakh. An additional deduction of 5,000 is available for preventive health checkups. And the next tax saving option that we have is 80DD. In this, the medical treatment expense for certain ailments are covered, and the maximum deduction allowed is 1 lakh, and the potential saving that we can have is 30,000. And the diseases that are covered are neurological diseases like Parkinson's, dementia, and also cancers like malignant cancers and chronic renal failure, and also AIDS is covered, and chronic liver disease like cirrhosis is covered. So the next tax saving option that we have is under section 80TTA. The deduction allowed is 10,000 on interest earned on saving account deposits, and the maximum deduction allowed is 10,000 rupees, and the potential saving that we can do is up to 3,000 rupees. The next tax saving option that we have is under section 24B. It is for the interest paid on home loan. That is up to 2 lakhs for self-occupied property, and the maximum deductions allowed is 2 lakh rupees, and the potential tax saving that we can get is up to 60,000 rupees. So let's see what is the next tax saving option. So the next tax saving option we have is under 80EEB. This is for the interest paid on electrical vehicle loan, and the maximum deduction is 1.5 lakhs, and the potential saving we can get is 45,000 rupees. And the next section that we have is 80E. This is for interest on education loan. The maximum deduction allowed is full interest paid can be shown in the maximum deductions, and the potential saving is variable based upon the interest paid. So let's see what are the details about education loan. So eligible individuals are tax payers, spouse, children or student under legal guardianship, and the purpose is higher education including graduation or post-graduation courses in recognized institutes only. Duration of deduction is up to 8 consecutive assessment years or until interest repayment, whichever is earlier. The loan source, which is very important, loans taken from recognized financial institutes or approved charitable institutes only. And the qualifying courses mainly are engineering, medicine, management, applied sciences, etc. Only recognized by a recognized institution. And the deductible amount, the entire interest paid on the education loan is eligible. Repayment or principal amount is not eligible for deductions. Only interest is deductible. Loan type not eligible. Personal loan is not eligible specifically for higher education, and the maximum deduction allowed is there is no upper limit. The entire interest is deductible. So the next tax saving option that we have are like we can save in 80G donations to specific funds and charitable institutes, and 80G rent paid if HRA is not received, 80U deductions for a disabled person, 80D deductions for maintenance of a disabled dependent, and 80GA donation to scientific research or rural development, and 80GC contribution to political parties, and also we have LTA leave travel allowance, and meal coupons also we can show exemption is allowed for meal coupon voucher or coupon provided by employer up to 50 per meal. The maximum deductions allowed is 1800 rupees per month. So friends, thank you very much for watching the video. I'm really thankful. Please subscribe to my channel. Thank you very much. Thank you.